Hello everyone, welcome to the channel. What I have taken now is Nifty's 4-hour chart. Okay, so we do this weekly narrative every week as to how the Nifty can travel over the coming week and how far the ranges can be defined and how the market might travel. The reason why I'm saying might travel is there are possibilities in the market for it to go upside and there are possibilities for it to go downside also. This is a game of probability. So how can you win in the game of probability is to define your risk and manage your risk accordingly. See, many videos will talk about levels. In our videos, we talk about logic behind those levels. We don't talk blindly saying like market will go up, market will come down. No, we don't do that. What we do is currently what we can see from 4 hours chart is market is in a bullish trend. In 4 hours chart, market was not able to break this lowest point with a closure. It did a liquidity sweep and it closed above, and the moment market opened on Friday, it was a gap up session and market did not move much. If I show you in 15 minutes time frame, market was completely in a small range of around 70 to 80 points. Nothing. There was literally no movement at all on Friday. So where does this leave us is market might give an one side momentum in this coming week. Till where market might go is, since currently if you see the Nifty's structure again in 4 hours, this was the last supply and there is this extreme supply. Market has done a liquidity sweep, so there are high chances if market breaks 24,243, meaning the middle point of this supply, middle point of this entire box, if I just calculate it again, it is 240. So 24,240, just draw a line. Okay, if market breaks 24,240 with a proper to proper closure on Monday session by opening flat, okay, then we can see a rally all the way till 24,420. Simple. Keep your trading as simple as this. Just wait for a closure in 15 minutes candle, and once we get a closure by opening flat, then we can see a rally till 24,420. Book your profits here, and once market gives a small to small negative reaction like this in a 5 minutes time frame or a 1 minute time frame or 2 minutes time frame, then we can see a gap fill happening on the downward direction. Why does market has to go here and then come down? The reason is simple. Every time, whenever, consider this as an auction. Okay, so let's assume you have gone for an auction or gone for a vegetable market to buy some vegetables. Okay, so earlier price of 1 kilo of potato, for example, is around 50 rupees. Okay, so this is a standard price you have kept, and once you go to the market, you see that the potatoes price is 20 rupees per kilo. Would you buy 2.5 kilos of potato just because the price is 20, or would you still buy only 1 kilo of potato because that is what is requirement? That is what is called as mindset of human and mindset of the market also. The reason why I'm saying is 50 kilos is the average price. If market comes to 20, then it will be acting as a demand, meaning buyers will be more interested to buy that 1 kilo of potato when the price is 20 rupees. Whereas on the other side, if you go to market and instead of 50 rupees per kilo, the potato price is 90 rupees per kilo, would you be interested to buy that potato at 90 rupees? Obviously no, right? Because your budget is 50 rupees and currently the market price is 90 rupees. So you will just say like, okay, I'm not interested. I don't even want to buy half kilo of this. Rather, I will buy some other vegetables, right? That's how supply works. So demand and supply is simple to simple concept that if you get a discounted price, buyers are interested. If you get a premium price, meaning higher price, sellers are interested. So for the market perspective, if market comes down and fills this gap, obviously prices of Nifty will be low, buyers would be interested. Whereas if the market goes up and fills the supply, premium price for the Nifty is higher now, meaning if sellers want to sell this market, they don't want to sell it here. Rather, they want to sell it here and take it down till here. this entirety of this move is what they would be interested from this point 24,420 all the way till 24 23 to 80 is like almost close to 800 points. That is what sellers would be interested, 600 to 800 points, right? So understand this concept. Keep your trading as simple as possible. Don't complicate it with 100 indicators, 100 telegram channels. Don't do all that. Okay, so if market opens flat and goes up, yeah, we can see a rally till here. If market opens pretty big gap up, then as I discussed, I would like to monitor here as to whether I would like to see a negative reaction like this happening in the market before taking the market down at least till Friday session closing. This is second scenario. Third scenario is if this negative reaction is not got and if market rallies above this 24,520 swing point, then there can be a huge to huge rally because we can see that this range is efficient, meaning market has already retested these ranges. So ideally market might travel all the way till 24,854. Not even 854. We can even see that there is another supply here sitting out here. Even this is retested by this wick. So ideally market might travel till this swing point as a upcoming range in this coming weeks if market sustains above the supply, because there is no other reversal points available in the market for market to even reverse from a particular range. So do not be in a greedy position thinking like market might go all the way till here. No, we need to see proper closures above this. May not happen by Monday session, but can happen by Tuesday, Wednesday, Thursday session, where market might rally till here. On the other hand, market might also rally down till the open demands which we have marked here till 23,500 or even 23,300 range if a closures below this happens properly. Okay, so don't be biased in the market. Always have a fixed mindset or a fixed plan, rather not even a mindset, fixed plan before even entering into any trades. This is my plan, this is my entry point, this is my stop loss, this is my target. These three things have to be defined by you before even you enter into any kind of trade. Okay, so there are two important things which I would like to emphasize to close this video. One is the news related to FIIs and DAIs. I don't generally talk about these kind of news, but if you see here, there is huge buying which has happened when it comes to Friday session, meaning market participants, both in foreign investors and domestic investors, have invested close to around 4,600 crores of buying which has happened in the market. So this is obviously a positive news for the market. At the same time, our kind President Donald Trump has made sure that there is a negative news also which has flown in the market. He has again striked Strait of Hormuz and it is temporarily closed again. So these two will act as your fuel for the market, and it can also be a volatile session, meaning even if market opens flat, it can go here, come down fast, go up fast, like that. The moves might be very very fast because of both positive and negative news which has been released over the weekend. So whatever happens, keep your quantity size low. Okay, don't always think that okay, I'm going to go with 1 lakh capital, 5 lakh capital, 10 lakh capital, and I'm going to make 1 crore today only. No, enjoy the process. Make sure that you are trading even after 5 years. That should be your mindset. It's not like in next 5 days I have to make 1 crore. No, in next 5 years also I should be trading and I should enjoy the process of trading. That is how your mindset should be. For you to sustain in the market even after 5 years, you can sustain only when your risk management is at a very very good psychological level, meaning this is my risk, this is my reward, this is what should be your mindset always. I hope this video is educative. Thank you so much for watching. We'll meet in the next education video.